Hello, ladies and gentlemen. Welcome back to Reserved Investments. And I am either your least favorite YouTuber or your least favorite YouTuber. I'll let you decide. We'll let that rattle around in your head like Pac-Man while we get to the crux of today's video. So what I want to talk about today is tips on buying antiques, collectibles, whether you're trying to invest in them, whether you're trying to flip them, whether you're trying to speculate on them, or even if you're just buying them because you have a passion for them and you want to add them to your own collection. There's a right way and a wrong way to go about this. And we talked about this a little bit in earlier videos. I want to expand on a lot of these talking points because one of the things that I often say on this channel is you have to learn to let go. You have to learn to sell into the hype if you're going to attempt to make money in these markets, whether it's over the short term or over the long term. One of the keys to making money in the antiques and collectibles trade is to understand that if you have an emotional attachment to these items, that is the antithesis to making money in these markets. Collectibles have no underlying cash flows. In order to take advantage of making money in these markets, you have to sell the item in question. You got to let it go. You got to send it on its way, take the money and put it in something else. Rinse and repeat. That's how you make money in these markets. Now, to be fair, there are certain items. I have some of these items in my collection that if you get a hold of them, there are so few of them out there that if you do let one of those pieces go, it's going to be very hard to go back into the market and buy that item again. Those items, however, are the exceptions. They are not the rule. Even if you are into like PSA 10 Pokemon cards, even certain comic books, vintage comic books in CGC 9.8 condition, these items are readily available at any given time. This is why during the COVID collectible boom, I begged you guys, if you want to make money in these markets, now is the time. Simply sell into the hype. Unfortunately, looking at the numbers, looking at what happened in the antiques and collectibles trade during that time, everybody was stuck indoors. Everybody was getting free government money, and they were, instead of investing it wisely, they were spending it on collectibles whose prices were inflated simply because everybody else was buying the same stuff. And the people that made the money, we now know, were the people like me who were selling into the hype. Always remember, for the most part, collectibles are very illiquid. If we compare investing in collectibles with that of other investment commodities out there, whether it's stocks, bonds, mutual funds, ETFs, real estate, even gold, silver, cryptocurrency, you understand that collectibles make up a very small segment of investments. If you would pull any true investor's portfolio, there's a plethora of investors out there that invest in nothing but traditional assets, maybe also real estate. There's very few that choose to diversify in collectibles. So collectibles by their nature are very illiquid. It is very easy to go into the market and buy any collectible you want. It is much harder to consistently sell those collectibles on the open market for a profit. And this is something that everybody gets wrong because you're all sucked into the hype that is being put forth in front of you on Facebook collecting forums, collecting groups that are online, TikTok videos, YouTube videos, where everybody's showing you how easy it is to make money in these markets. Now, obviously, depending on the time, depending on the collecting category, certain markets are easier to make money in than others. Case in point, we get in my DeLorean time machine. We go back to the year 1996, 1997. Are you aware? Beanie Babies were the top performing asset class for those 2 years in a row, even beating out the returns of Wall Street for those 2 years. Beanie Babies were a massively profitable commodity back in the mid to late 1990s. Now, obviously, if you were a Timmy, if you were a Kimmy, if you were a Poindexter, you were holding those items, hoping that they were going to go up in value exponentially over time. In the year 2025, looking back, we know how that turned out. As a matter of fact, I was one of those evil individuals back then that did make a lot of money in that market. And I used to tell people, Don't try to invest in this market long term. Now, this is where it gets a little bit complicated because, believe it or not, Ty, the company that produced those Beanie Babies, is still in existence to this very day. As a matter of fact, you can buy modern era Beanie Babies. They are still being advertised, they are still being produced, and the company is turning a profit making those little stuffed deformed critters in the year 2025. The difference is speculators, investors, people that saw them as an investment commodity moved on because the market tanked. Now, there is an interesting video out there. If you want to watch it, it's like 8 minutes long. I'm going to link it in the video description. It is actually called Bankrupt by Beanies. It's by, I think, if I remember correctly, Chris Robinson. He did the video where he talks about his obsession with Beanie Babies and how he ended up, unfortunately, with a house full of $100,000 worth of Beanie Babies that are now virtually worthless. Again, it's only 8 minutes long. I'm going to put a link to it in the video description. Please feel free to check that out so you can see what I mean. Now, where am I going with this? Well, when we look at certain collecting categories, Beanie Babies, Pez dispensers, Pokemon cards, rare coins, vintage toys, video games, high-end art, these are all markets that strata the antiques and collectibles trade. But these markets have different fundamentals. For instance, if you're going to come to me and you want to invest in rare coins or pieces of currency, those items are best designed for investing in over the long term. Whereas if you want to invest in modern era Pokemon cards and you go to your local Walmart, you go to your local Target or Costco, wherever you go to buy these cards, and you see prismatic evolutions or surging sparks sitting on the store shelf, you could literally buy those items today, go home, flip them on the secondary market, and make a substantial profit. So why wouldn't you do that? Why would you attempt to hoard those items when literally you can make money immediately upon purchasing those items? So there's a different mentality in place depending on the market, depending on the collectible, and of course, depending on how much knowledge the individual collector or investor or speculator has in understanding not only finance, but more specifically what we teach on this channel, collectible finance. So this is the key to making money in these markets. And again, you have to be willing to let these items go. Always remember the golden rule. And I have to repeat it again and again on this channel throughout this video. Collectibles have no underlying cash flows. If an item you bought, you paid $3,000 for it, it's now worth $6,000. If you want to make any amount of money on that, you have to sell it in the market and you have to capture those gains. You got to let the item go. You can't keep holding on to it. It's not serving you a purpose past a certain point. And this is why we have to really start talking about, we're not going to do it so much in this video, opportunity costs. You have to look at how long and how much time and money it is costing you tying up your money in a collectible, not just 1 year, 2 year, but if you're holding this 5, 10, 15, 20, 30 years, what is the opportunity cost where you could be putting that money into something else? You could be putting that money in a piece of real estate where every month you're going to get a rent payment from that piece of real estate. You could be putting that money in an index fund where not only are you going to have the capital appreciation of that index fund as the individual stocks that make up that fund grow in value, every 3 months you're also going to get a dividend out of that investment. So therefore, there's two sets of different cash flows, technically, in that type of investment, whereas collectibles only have one. We'll talk about that more in other videos. Now, another thing we got to do, when you start getting into collectible investing, you have to ask yourself, do you really want to own this item? And what is the reason you are buying it? You see, today in the year 2025, everybody is so siloed on the internet. We have people out there where if you log on to certain collecting forums, if you watch a certain YouTuber, if you watch people on TikTok, they're going to make it believe where this particular item, whether it's Pokemon cards, rare coins, comic books, vintage toys, video games, whatever it is, it's the greatest investment ever. And how most of these people get sucked in to these markets is through a sense of nostalgia, an emotional attachment to the item. Then what happens is confirmation bias sets in. Well, look at this guy. He lives in a big fancy house. He's surrounded by all these Pokemon cards or all these video games or all these comic books. Therefore, he put his money in those items. Obviously, that's why he's able to finance that lifestyle. 99.9% of that is 100% false. Your mind is filling in incorrect gaps. Case in point, I'm a huge fan of Rudy with Alpha Investments. I got nothing against the guy. But those of you that skipped over the first 2 years of his channel and just watch his current videos, you miss where he started from. When Rudy first came on the scene, he talks about having a $200,000 corporate bond that almost defaulted on him. And he goes into depth talking about that story. Now, this is my question for a lot of you that think if you're going to hoard Pokemon cards or Magic the Gathering cards and you're going to become the next Rudy, did any of you guys in your late 20s, early 30s maybe, have a $200,000 corporate bond? I know a lot of you probably did not. And again, I can't speak for myself. I'm the exception to the rule. By the time I was 30, I had hundreds of thousands of dollars in brokerage accounts. That's all I'm going to say. So I'm on a different level than most people. I recognize that. I got lucky very early on. So did Rudy with Alpha Investments. That's why he's at the place that he is at right now. He had a good support system. He had a good financial plan, and he got very lucky along the way. His YouTube channel generates how many tens of thousands of dollars per month on average? Look at it that way. So this is something that you have to take into account. Usually, following a lot of these people and doing what they're doing now isn't going to generate you the same level of success that they had as a result because they started at a different starting point. I myself, I got very lucky early on with eBay back in the 1990s that helped launch me financially. Now, obviously, I don't have the resources that Rudy has. Rudy was able to launch himself into the stratosphere. He's buying modern era product at the distributor price level. He's selling it to his patrons. He gets money from his patron accounts. He gets money from his investments. And of course, he gets tens of thousands of revenue from YouTube alone. So he really is in the stratosphere. Me, I'm a little bit lower than that, but I do very well for myself in the antiques and collectibles trade. And I still have people that watch this channel and they go, hey, I want to be like Sean, man. I want to be like Sean with reserved investments. Then when I talk to these people and I try to teach them collectible finance and I try to tell them, you also have to diversify assets. You should have money in index funds. You should be working to at least buy a house, have real estate. Their eyes glaze over. They don't want to learn the true basics to this. They just want to go to the internet and they want to be spoon-fed information that they want to believe about how these markets operate. That's not how you become successful. That's why there's a lot of scam artists that take advantage of people, not only in the financial realm, in the collectibles realm, also in the dating realm. There's a lot of shady dating coaches out there that are preying on men, giving them toxic dating advice and the like. I'm sorry, if you get out in the real world and you actually meet people, or even if we're talking strictly antiques and collectibles, if you go and you start interacting with auctioneers or hardcore antique dealers, you're going to see a lot of the stuff that you guys are watching online is very, very toxic. And if you're one of these people that just gets their information from YouTube, TikTok, collecting forums, and heaven forbid, reality shows like American Pickers, Storage Wars, Antiques Roadshow, Pawn Stars, you guys are at a disadvantage because you really don't know the basics of how these markets operate and work. You're not really interacting with people. You're interacting with avatars. And I hate to say it, you're sitting at home being an armchair expert, letting reality TV dictate how the antiques and collectibles trade operates. That's not reality, guys. You have to disconnect from the confirmation bias of being one of these individuals that sees somebody surrounded by a room full of video games and go, that guy put all his money in video games. I'm going to do that. I'm going to have the same exact result. That is really not what happened behind the scenes. I've said this before. A lot of you guys will read something that you find on me about when I started my first business, where I was buying and selling video games and all these collectibles, and you go, that's how Reserved Investments got his money. Well, really, it's a little bit more complicated than that. Yes, that's how I got my money, but I took those profits and I put them in index funds, and now 20, 30 years later, the index funds accelerated in value to the point now I have hundreds of thousands of dollars just sitting where it's like, dude, I don't understand how I got here. I remember writing checks to Vanguard back in like 2000, 2001 for $50 a week, $50 a month. It's just the stock market outperformed expectations to the point where my net worth just shot through the roof. That's how I got here. So it wasn't just me going to the market, buying items, putting them in a closet, and then going on YouTube going, hey, look at this. I have this rare coin, or I have this rare video game, or I have this rare comic book. If you do this, you'll get there too. That's really not how it worked out. And the same is true for most of these people in the collectible space that are just spewing, I'm not going to say lies because I understand that they believe it because they lived it, but it's really not the truth if you want to build wealth over the long term. Those steps aren't going to really help you. Next point, please understand the difference between organic collectability and mass-produced scarcity. Now, this is obvious. Obviously, if you watch this channel, you should already know this core concept. For the record, Pokemon does have organic collectability. So do video games. So do vintage toys. So do comic books. So do rare coins. So do pieces of certain high-end art. So do historical documents, currency. The list goes on and on. That doesn't mean, though, that all those items are going to be good investments going forward. Case in point, if we go back to 1996, 1997, Beanie Babies were the most profitable asset class. Today we know that was a fool's game, and anybody back there living it who had any knowledge of how the antiques and collectibles trade operates, myself included, Harry Rinker also called it back then, collectibles expert Harry Rinker, who I talk about in earlier videos on this channel. Anybody that could have seen the light knew that that was a farce that was eventually going to end, and it did. Another thing you need to learn is you have to understand how to properly use debt, especially in the antiques and collectibles trade. And I waited until we're 17 minutes into this video to start talking about this because this is going to generate a series of videos talking about this. There's a lot of people that seem to think, like someone like me, believe it or not, I'm not against debt. I am against using debt, also known as leverage, unintelligently. Meaning there are reasons and there are ways to use debt and leverage intelligently where you can apply it to the antiques and collectibles trade. So there are certain purchases that you make where if you understand the true cost of that debt, if you have a plan in place, you can use debt to acquire certain purchases. Case in point, let me use this as an example. Let's say that you're looking at an item to bid that's coming up for auction. And a lot of people, maybe it's due to the overall economy, maybe it's just due to general collector interest at that time. The piece is going to sell, you expect it to sell for $3,500, but you notice at the last minute, you can put in a bid and you can get that item for $2,800. Now let's assume that you don't have any money to pay for that item up front, but you have a credit card. Well, depending on the interest rate of the credit card, and if you can pay it off at the end of the month, or maybe you have to go 2 or 3 months to pay it off, it could be worth buying that item for $2,800 as opposed to buying it in the open market at some point in the future and paying the full $3,500. But you must understand the cost of that money, the cost of that leverage, the cost of that debt. Obviously, if you have really good credit and you do business with certain credit unions, like I have a credit card in my pocket where I have a 7.9% flat interest rate, and I have, I'm just going to state this, $100,000 credit limit on it. So when I go into the market for collectibles, sometimes I will use that credit card to purchase certain antiques and collectibles. I'm not going to lie, it's beneficial to me. Now, at 8% though, I have to either pay that purchase off within the 30 days following the purchase of that item. Otherwise, I'm going to get hit with interest charges. Or I have to buy it at a price point where I know I'm getting it at a reduced cost, meaning the item is selling for a significant discount compared to the open market, where if I stretch out that purchase over, let's say, 2, 3, or 4 months, I can factor in the cost of that money accordingly, so I know exactly the full price that I am paying for that item in question. Now, I normally don't like to do that because I do have hundreds of thousands of dollars sitting in index funds. I'm not going to lie. So normally I don't need to go into debt. Little shameless plug there. But if I was going to do that, sometimes it does make sense to use a low interest credit card like that to finance something that I may have to stretch for at certain times. So I'm not against debt being applied to these markets, but you have to use it responsibly. There's a ton of people that are in massive amounts of debt because they get too emotionally attached to these markets. They get too emotionally attached to these items. Again, we are going to cover the subject of utilizing debt responsibly in the antiques and collectibles trade in other upcoming videos, because you really have to understand what it does to your finances and what it does also to the cost of the item you are buying. Always remember, when you go into debt for something, I don't care if it's a car, I don't care if it's a house, I don't care if it's a college education, I don't care if it's a box of Pokemon cards. You understand that you are borrowing against your future to buy that item at present. And usually, for certain things, that is not a wise idea. So this also brings me to the understanding that, again, you have to really realize that a good investment can be a bad investment depending on one's financial circumstances and habits. And this is something that, unfortunately, we don't talk enough about on the internet. Always remember, if your upkeep is more than your income, your upkeep is going to be your downfall. Always remember that. If you spend more than you earn, you have a problem. If you are in a significant amount of credit card debt, for the most part, unless if something happened to you, you got struck with an illness, heaven forbid, my heart goes out to you, or you lost your job, something like that happened. If that didn't happen to you and you were in credit card debt, you are living above your means. I'm sorry to tell you. Now, let's make a couple more points here, because there is one thing that I want to close this video with. 2 key points here. Number 1, always remember, it is best to build a collection, even if you are investing in the items, over the long term rather than the short term. Meaning, you want a dollar cost average into a lot of these markets. Case in point, those of you that were paying ridiculous prices for collectibles during the COVID boom, whether it was graded video games, Marvel trading cards, comic books, pick your market. All of them were in the stratosphere at that time. I told you guys to pull back. You would have been better off making less purchases at that point in time because those markets were in a market frenzy. You know, I've had people, I've done videos now, multiple videos, on the graded video game bubble, the bubble that occurred around Marvel trading cards and PSA 10 condition, where people were threatening me, telling me I didn't know what I was talking about, telling me that 3 to 5 years they would be coming back into my channel comments, laughing at me because I told them not to invest in those markets back then. Well, if you do a price history, you can see I was 100% correct. Those markets were in the stratosphere. A lot of them crashed almost 80% in certain instances. Now, to be fair, there's a handful of graded video games. There's a handful of PSA 10 Marvel trading cards that still sell for a premium. But if you compare those prices to the high prices they achieved during the pandemic, you're going to see prices have dropped exponentially. Where am I going with this? Go slow when you invest in these markets. Case in point, I've been building a rare coin collection and a rare currency collection for the past 20 years. Let me say that again. I'm an expert in the antiques and collectibles trade. Have a lot of money at my disposal. And I've been building those collections for the last 20 years. Do you know why? Because the best way to do this is very slowly, and you dollar cost average in over time. That's why if you have an organic collecting market that's multi-generational, meaning your grandparents collected it, your parents collected it, now it's still going strong. That market's pretty stable, okay? Most likely that's an established market. If not, in certain instances, it's probably a mature and sophisticated market. If that's the type of market you're dealing with, you should be able to dollar cost average into that market over time. And if you would average out the price that you're paying for those pieces, some you're going to overpay for, some you're going to get at a substantial discount. When you take that collection to auction, though, there's a better chance you're going to make a much greater profit than if you just went all in and one particular point in time. Meaning, if you spread out your purchases over years rather than days, weeks, or months, all statistics show us that you do better when you sell those items at auction than somebody who just went all in at once, bought everything that they wanted, and then pulled back from the market, never going back in that market again. And if you want proof on this, point 2, collector burnout is a real thing. If you go and buy everything you can, you will most likely make a bad financial decision. And as a result, you will end up overpaying for a lot of the pieces you are buying. Collectibles, by their nature, are supposed to be inherently scarce. They're supposed to be based on supply and demand. I've said this before. If you can go to the market and you can buy it on eBay, if you can buy it through a dealer, if it's always readily available at auction, chances are, I hate to say it, I'm not saying you can't make money on the piece, but probably you're not going to want that piece in your collection over the long term. It should require a little bit of due diligence to find some of these harder high-end pieces. And that's the name of the game when we're talking about items that have value in the antiques and collectibles trade. The final piece of advice I'm going to give you, now that I've been talking for 26 minutes, is, and I've covered this in so many other videos, I actually did a video where I shared my screen showing you guys how I analyze prices at auction, how I choose the proper bidding price. You need to learn how to correctly bid at auction and set a maximum you are willing to pay for any item before the auction starts, and you have to stick to it, guys. I see so many people get caught up in FOMO. You know, guys, I'm one of those horrible people where if I'm bidding on something at auction and I know I can bid you up and I can pretty much pull out of the auction and you can end up paying an exorbitant price for the item because you allowed me to bid you up, I will do that to you. I have been known to do this in the past. And what's great on sites like Heritage Auctions, on sites like Hakes Auctions, on any of these other auction sites, you're pretty much anonymous if you do that. Nobody even knows it's me doing that. But I will occasionally teach people a lesson in these markets where I can tell they're all in. They're emotionally attached to the item and they're willing to pay anything to get it. And what is it that I tell you guys? That's a fool's game. Always remember the greater fool theory. The greater fool theory states that if there's a piece out there that you paid a record price for, you at that particular point in time are the greater fool. It's that simple, guys. That's how these items work. It's the concept where if you go into the market and you sell something, if somebody pays a record price for it, congratulations, they were the greater fool at that particular point in time that paid that record price. Now, that doesn't mean that person's always going to be the greater fool. Obviously, if they're able to sell that item for an even higher price, then that new participant that paid that higher price is now the greater fool. But you really have to understand the psychology behind how this works if you really want to understand collectible finance. This is why I always have to laugh. I get troll emails, I get troll comments where people try to tell me they're going to bid me up at auction, they're going to do this, they're going to do that, and I tell them, you can't. It doesn't work on me because I'm not emotionally invested in these items. They're just there. I like them. I know what I'm doing because I analyze the market. And if I'm willing to part with X number of dollars to own that item and I end up owning it, that's great. If not, guess what? Somebody else gets it. It's just the way the market works. Out of every 10 items that I bid on, whether it's through Hakes, Heritage, other auction sites that I'm not going to even mention, eBay or the like, are you aware? I usually only win one. I have a 10% success ratio. And that's what has made me massively successful in the antiques and collectibles trade. That's all I need. Always remember the golden rule. Warren Buffett once said this. Price is what you pay. Value is what you get. If you can apply that concept to the antiques and collectibles trade, I can assure you, if you understand how these markets work, you will be successful. Thank you for watching. Let me know your thoughts in the comment section below. And if you are subscribed to this channel, I may, just may, end up seeing you in another upcoming video.